Hello and welcome to another update video about gold. The gold price, highly interesting. Maybe we start to look Maybe we start to look at it at the daily first, weekly chart as well, because it is highly relevant with where we currently are. Overall, in the very high time frame, we have completed here nearly a 5-wave move, and you can see for how long this has been going on. 1, 2, we're talking here about the year 2000. Wave 3, 2011, Wave 4 finished in 2016, and now in Wave 5. I think Wave 5 is still ongoing because we can count within Wave 5 at the moment a Wave 1, 2, 3, 4, and the 5th wave is still to come. I am looking at a possible price target for this 5th wave in the area around 2,500 to 2,600, roughly in that range. Roughly in that range. Now again, that can take years to play out until we get there. That means we are currently in a wave 4, at least based on the primary wave count. And this wave count will be relevant as long as we hold above the 1605 US dollar level. So below the 1605 US dollar level, a different wave count will come into play that would see gold crash all the way down to $1,000, or at least to retest that level with a very high likelihood. So the $1,600 level needs to hold. If this one doesn't hold, we can go into the lower ground floor. Okay. After which, however, we would then probably have a very, very long bull run. But that will then, again, that would increase the length of a bear market and really lead and push us into a bear market, to be honest, before we can see a recovery. If we can stay above $1,600 and push up from there, it would be one more rally into the direction that I just told you, between 2,500 and 2,600. But then after that, because this is the completion of the yellow wave 5 and the blue wave 5 here, and then we are looking at a long correction. All of this will be corrected. All of this. Here I'm looking certainly at roughly $1,000, okay? In that region. Maybe 900 to 1,200. That's sort of what I'd be looking for. And this will be a long bear market. So either it starts now, but then we only get that signal below $1,600. And I said it before, I'm not looking at a low below 1,600 on the daily time frame. I'm looking at maybe a few daily candles closed below that level, basically a substantial drop below that level. So very interesting at the moment. But certainly, if we get to that level here, 2,400, 2,500, we need to be aware there will be a very long bear market. We are getting towards the end of a cycle here, in my opinion. So, however, that means there should still be another rally. And at the moment we are thinking and discussing here if the wave 4 could be finished or not. This yellow wave 4 that I just showed you, could it be finished, could it not be finished? At the moment we can still, let's say, be carefully positive that it is finished, but that correction was fairly strong. It has reached my target area and it's starting to potentially turn around, making higher highs and higher lows. However, what is currently moving up here looks very corrective. So it looks very corrective. There could still be another dip. We can still max out that green area a little bit more. We could still make a lower low here at around 1696 and maybe even briefly drop a bit lower. But as soon as we drop below 1679, that is the previous low where there is currently a potential that the low was in. But if we retest this level and then actually lose it, then this unlocks prices, in the worst case, well, not in the worst case, but in this scenario, all the way down to 1605, where we can recover from. So we would then have to move this higher level low to the new low. For now, as long as we're holding, here, this green target area, it's all okay. We've even moved above this, a descending trend line that is already a potential first signal. However, what you need to understand, we haven't really broken the previous swing high. We tried it twice and failed. So also it's very choppy price action. This at the moment doesn't really give me a lot of confidence. I would be much more confident if gold could. This is the first signal, yes indeed, and we might just be retesting the trend line from above and could start from here. So if we hold this level, which is at 1720, we can certainly move to 1752. And if we then break above this level, that is I think the 61.8% FIB level. Let's take a look. Now the 50% level. So if we can make it back above the 50% FIB level, yeah, you have also the 50-day moving average here. So if we can make it above that level, that would be a potentially bullish signal. But really, the downside potential only gets massively reduced as soon as we break above the 1779 level. So we can make it above that swing high, substantially hold it. That would be a good signal. We're in the wave 3. Unfortunately, the signal we're getting here at the moment is still fairly weak. Yeah, not a very strong signal and also not a clear impulse. So we still need to be careful here, and still I would say have to expect that we could max out this lower this target area more. Again, also here you can draw a nice trend line actually, and this looks a bit like an ascending wedge. So you could call this a rather bearish pattern, out of which we could eventually break to the downside. So this is not a bullish pattern. This pattern doesn't give a lot of confidence. Even if this is something bullish like a leading diagonal in a wave 3, you would expect here a correction to the downside. Yeah, and if we then make a higher low, okay, that could be a signal. So for example, you have here 1, 2, 3, 4, 5, and this could be a wave 2 correction now. But also here, then we should in this wave 2 correction break out of this wedge, go a bit deeper, and then we then see an impulse emerging from there. That would be a good signal that ideally breaks above the 1752 level and also the 50-day moving average. So these are the key levels to watch out for at the moment. We can also take a look here at the daily time frame. Here at the moment, a daily time frame would certainly support higher prices, yeah, so that the low is in, because we have here a reduction of negative momentum that is looking decent, and also here on the RSI on the daily we have a bullish crossover. So based on that, this could indicate we are going up from here, but I would want to see additional price confirmation because we are in a bearish pattern at the moment, this ascending wedge. Now these can break out to the upside, certainly, but signal is still too weak. Now another potentially promising signal is here, a potential that hasn't happened yet, the potential bullish crossover on the 4-day chart on the RSI. Yeah, that gives us a little bit of a positive clue. But if I go more to the longer time frame charts, here we don't yet see these clear signals. So the 2-week chart, for example, is a very relevant chart. It has not yet turned to the upside. Here we still have negative signals on both the RSI and the MACD, and even on the weekly it's not really promising. So here fairly much indecision still in the market. So it's all about these key levels now. Important in the current environment generally, I think, to keep an open mind, and I think it's worth watching this ascending wedge. It is worth watching the key levels that I mentioned, and a breakout in my opinion would become much more likely above 1752, and a very, very good confirmation will be 1779. And to the downside, we need to be careful not to break below $1,600, as it would lead us into a longer bear market. Okay, thanks a lot for watching. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then also check out my main channel, More Crypto Online. Thanks a lot for watching. Bye bye.